Welcome back to the Frugal Prof channel on YouTube, and as always, if you like this video, please like it and subscribe to the channel because it helps us grow. Now, this was the biggest week of 2019 for the stock market, for investors, for the Fed, and for Apple. So let's get right into it. Heading into the week, the big news was going to be Apple earnings on Tuesday, and the earnings were good enough by Wall Street. The stock bounced $11 in after-hours trading. iPhone sales were down 13%, but investors overlooked that. They're looking forward to the Apple credit card. There's a lot of buzz about that. So again, Tuesday Apple earnings were good enough. The stock is up 11, which took us into Wednesday, which was Fed Day. Everyone was expecting Jerome Powell and the Fed to cut interest rates by 25 basis points. So in the morning action, the stock market was up 75 points on the basis of Apple better than expected earnings. And once the Fed cut by 25 basis points, which was expected, the market turned south, down 50 points, which led into the question and answer session. And in the announcement, the Fed announced they were ending the balance sheet reduction. And a couple of the issues that were brought up in the statement, Jerome Powell mentioned simmering trade tensions as the reason why he was cutting interest rates. And he then went on in the question and answer session to explain that he sees this as a mid-course correction and not the beginning of a easing cycle. And that surprised Wall Street. Which took the market down 450 points. Then in the Q&A, as one of the reporters asked him and mentioned to him that the market was down 450 points, he walked back what he said and said what he is saying is it's not one interest rate cut and done, not one and done. So the day ended down 333 points, lots of volatility, big pop in gold, and heavy volume on both Tuesday and Wednesday. So heading into Thursday, the market rebounded 275 points, basically erased the Fed and the Powell correction from the day before. And then President Trump came out and mentioned that he was going to start tariffs on China September 1st, 10% on 300 billion of Chinese goods, which took the market down 266 points within a matter of minutes. A reversal like that we haven't seen in quite a while. So that took us to Friday. Friday was the jobs report. Jobs report was up 165,000, which was basically as expected. And the market ended Friday down 98 points. Basically on lingering concerns over exactly what the Fed is going to do and what Powell is trying to communicate to investors. So to sum up the week, the averages were down significantly, volume picked up significantly, gold was higher, volatility had a pop, oil was down, treasuries were higher. We saw yields on treasuries below 1.9%, which is the lowest yields we've seen in a long time. And Germany now has negative yields out 30 years. So looking forward, there's still earnings session, the tail end of earnings session, and we're also looking for either the Fed or Fed speakers to clarify exactly what they mean and what investors should expect on interest rates going forward. And as always, you never know what tweets or announcements will come from President Trump and the administration. So still a lot on tap. So that is it for this week. And if you like this video, please like it and subscribe to the channel because it helps us grow. Have a great one. Thanks.